What are the key directions for Bitcoin, gold, and silver that investors need to be watching right now? Joining me today is Florian Grummes, Managing Director of Midas Touch Consulting, and I'm David Lin of Kitco News. Florian, welcome to the show. I'm happy you're here.
Thanks, David, for having me. Pleasure.
The Federal Reserve has responded to this crisis with really historic levels of monetary stimulus. How do you feel about that? Is it excessive, as some analysts would say?
Well, without a doubt, it's the largest stimulus from governments and central bankers we ever seen in history. And the question is whether this is already enough in terms of, if you think through, I think at least 50 trillion US has been destroyed in the corona panic, and it probably is much more. We might face a wave of insolvencies. We have millions of unemployed. It is probably not enough to keep this system running. The problem is that this system is a Ponzi scheme system, in my opinion, for many decades already. It's a paper money system, and we're now probably in the end game. Nobody knows how long this will take, but I guess we are in the end stage, and it's a brutal fight, and people will have to learn and understand that by printing money, you don't create wealth.
That's a great point. And are you at all concerned about the risk of hyperinflation from so much money printing?
I think we're not there yet. The velocity of money is still way too slow. But it can happen, and it actually will happen because the Fed and all the other central banks are already behind the curve. They will have to print much more. We've seen it already. I think today it was announced that one of the largest wealth fund from Norway has to withdraw 37 billion US from the markets. So they will have to print much more money. And at some point, for anybody who's following these things a little bit closer, it's already mind-blowing. We're not talking about millions and billions. We're talking trillions and soon quadrillions and so on and so on. So the confidence in the fiat system is getting destroyed by the day. And people have to work very hard for their little monthly paycheck while governments print it out of thin air. This is not a system that is sustainable, and it's actually not fair.
We know in Europe that interest rates at many financial institutions are already negative. What else can the ECB do and other central banks around Europe to accommodate the economy right now?
Well, they will have to come up with more direct helicopter money, so to speak. I think they also will come up. It's just a question of time, probably, until there will be Corona bonds, even if it doesn't really make sense. There's no incentive to run your economy sustainable and on a wise level, because you just have to print more and more and more. And we're seeing this already. I think we will see haircuts at some point. So if you have money at the bank, you might lose 10, 15, 20, 50%. Who knows? You might get a forced mortgage on your house. We don't know. All these kind of things happened in the past. They will probably happen again. And I believe the best way to protect yourself against all this mess is really to own physical gold and silver and also be invested in Bitcoin.
Perfect. Yes. Great segue. On that note, let's talk about gold and silver. We'll talk about Bitcoin at the end of the interview. How do you feel about the precious metals right now? I know you've written reports saying that we may expect a correction into gold prices before they invert back into positive territory in terms of a bull run. Do you still feel that way? Well,
what we see right now for the last 3 to 4 weeks basically is a consolidation on rather high levels around the $1,700 mark. So that's a psychological number. If you become aware that gold reached 1689 in late February already, you can say, well, for the last 2.5 months, gold basically didn't progress too much. We're still trading around 1700. Yes, we had one sharp pullback during the Corona crash or Corona melted down. This can happen again. It's not very likely that the whole market will melt down immediately, but usually May, June, July are a bit more challenging months for gold. So I wouldn't be surprised to see some more consolidation and also a pullback at some point. Gold is running into a triangle for the last few weeks. We might break this to the up or to the downside. We will see. But I think there is a bit too many weak hands in the markets right now. So if you look at sentiment numbers, it still would take a little bit more of a pullback to calm the market down. But I think any dip larger than $50 to $100 is already a good buying opportunity in gold. And the same is true for the mining stocks, where I wouldn't be surprised to see maybe a pullback of 20, 30, 40%. And that would be a really good buying opportunity. And usually these things happen in this sector in June, July, August. That's usually a good time to get back into the market. Right now, I'm still not really seeing a good risk-reward ratio. And that's what we, as an investor, should look for, right?
If gold were to pull back, what is the floor you would be looking for?
I think the 50-day moving average around 1650 is already a good number. The 200-day moving average is at 1550. These are the two averages. I don't think gold will move below that much further. Initially, I thought that we might get a test of the old breakout level, so the resistance between 1350 and 1375 that limited gold for many years. I thought we should get a healthy pullback into that range. It doesn't look like we will get this at the moment. It looks more like consolidation on a high level, maybe one nasty little quick pullback where all the weekends are shaken off, and then the next wave up towards 1800, and then the all-time highs in 1920 will happen. And obviously, once gold sustainably takes out the all-time high at 1920, it will run easily a few $100 further into the mid-2000 range, I guess. And if you look at it on a very long-term perspective, and you can only compare it to the bull market in the 70s. Once the bull market started again in 76, it went up for 4 years, and it went up basically from $100 to $890, so nearly ninefold. If you use the same ratio to today's numbers, we would end up having gold at some point in the future, $8,000, $9,000 gold. But we're talking 5 to 10 years, I think, at least. But this is like a really big picture thing that I see.
All right. What about silver now? Are you bullish silver as well?
Yes, I think with silver, it probably doesn't matter too much right now whether you pay for it $15, $13, $10, or $20 an ounce. I mean, the truth is, if you go to your dealer, you don't get these prices. The premiums are still rather high, but they came down over the last few weeks. So I think silver has huge upside potential. It's extremely undervalued in comparison to gold. It's a very cheap inflation hedge, if you want so. I think at some point over the next few years, silver will run up against the $50 level again. That would be the third time, and maybe then another pullback, then a fourth attempt, and then probably the fifth or the sixth attempt will bring the breakthrough somewhere in the future over the next 2 to 5 years. And once that happens, I think silver is off to 3-digit numbers.
I've heard two conflicting arguments about silver. One, which is that, like you said, it's a good hedge during downtimes, especially during a recession when you might see silver outperform gold as gold climbs higher. I've also heard the counter argument that during a recession in the past, silver has behaved like an industrial metal, sinking with the rest of the broad equities index. Which camp are you in?
Well, what silver needs is the investment demand, right? And it didn't have that. And at the same time, silver is a byproduct of industrial metals production. So mainly it's coming from copper, lead, and zinc production, also gold. I think primary silver production just is 25% roundabout. And we had more like deflationary forces being at work over the last few years. Silver needs inflation. And if we get what we just talked about, a stagflation, so a stagnating economy and at the same time inflating prices at your grocery store, for example, then this is the ideal environment for silver. So silver is very inflationary sensible. I hope I said this right. That's when this kicks in, silver will take off, and it will be much faster and will run further than gold, but it usually starts much later than gold. So at 1550, I think it's a bargain. I think it's a great risk-reward ratio. Maybe it pulls back $1, $2, $3 from here. Yes, can always happen, but what I do personally is I'm buying silver.
You mentioned the mining stocks earlier and how they're due for a pullback as well. How do you feel their fundamentals have been affected by the pandemic? I read reports saying that because miners usually operate in such remote areas, maybe the virus hasn't hit them as hard, or maybe they're just, they're used to such things because we've seen Ebola in Africa as well. How do you see it?
Well, I think for the gold miners, gold is trading around 1700. Energy prices have collapsed. So big producers are making a ton of money. Any gold miner who has an average production cost or sustaining price of maybe around $1,000 they literally printing money here. And you see this already, the numbers that are coming out now. Many of them are in really good shape. Actually, it's the only asset class that is reporting good numbers at the moment and will continue so for the rest of the year, very likely. So I think they are in good shape. I think it's a very promising asset class at the moment. It's been a tough time for the miners over the last few years. Many of them did their homework. So I like many of them. There are some really good names in the sector. And the thing is just you have to be aware that most of them are not a really good buy and hold investment. So holding a mining stocks for longer than a few months or a year has normally not been a good idea because they are so volatile. There's actually just one company that I would be a blind buy and holder.
Can you share some of these names that you like?
Yeah, of course. I mean, I think the only real buy and hold investment in the mining industry is Agnico Eagle.
Okay.
I think that's no surprise. But I obviously love the royalty blue chips like Franco-Nevada and Wheaton Precious Metals. I also like Sandstorm. I also like the smaller royalty companies like Metalla and Ely Gold Royalties. And I am a big fan of Equinox. So all these companies on the pullback, I want to buy more into over the next few months. On the silver side, I like Pan American Silver, of course. I think it's a great company. It's probably the best silver company. But they all have had a nice run over the last 1.5 months, 2 months, since the Corona crash, basically. Most of them are up 100% and even more. So if they pull back a little bit, maybe 20, 30, 40%, I think they're getting interesting again.
Finally, on Bitcoin now, we've seen the Bitcoin halving happen earlier this week. It's a historic event for the cryptocurrency. What's your take on it?
Well, I mean, we mentioned already quantitative easing.
Yeah.
So fiat is experiencing quantitative easing, while Bitcoin has just experienced quantitative hardening. So by the code, and the code is actually the law in Bitcoin. This is the only regulation that Bitcoin really needs, and this is its own code. So it's exactly the opposite happening in Bitcoin than what's going on with the fiat currencies all over the world. And I believe we are in the 21st century. I believe the first quantum leap for mankind was the internet, the decentralization of information and knowledge, and based upon that, we have a second quantum leap, which is blockchain, crypto, and especially Bitcoin, which brings the decentralization of power and control and money. And I think it's an unstoppable force. I think people have to wake up step by step. This is a process, of course, but they will and have to wake up to the fact that money and state are better separated. Because what we are seeing now and experiencing on a daily basis is that this is not a good idea, that a few people are allowed to make decisions for everybody else about money. I think that's the general fundamental perspective of Bitcoin. And you just heard the other day Paul Tudor Jones saying that he's 1 to 2% of his assets are in Bitcoin. And I think this will give a huge boost to the whole sector by itself, because now for any institutional money manager, he has to compete. And if he didn't have Bitcoin in his portfolio, he might lose his job because he underperformed at some point. So I think that Bitcoin is a form of digital gold. It's gold 2.0 probably. It's a perfect way to hedge yourself against all these crazy, unprecedented money printing orgies that are run by all the states all over the world. And I think Bitcoin is also the only way for us to really maintain our freedom and liberty as a society that we experience and that we and our ancestors have been fighting for over the last 500 to 600 years. So people should take this really serious. And I've been always recommending you don't have to put a lot of money into Bitcoin. Just start with 20 or 50 bucks. Just figure out how it works. And you will see it's not that difficult. Yes, it's still in its infancy. Yes, it's still a lot of need to progress and develop this whole thing into a more easy, accessible kind of form of money. But the Lightning Network is an upgrade to Bitcoin. It works very fast and flawlessly. I think most of the scalability problems have been solved with it. And generally, to bring this together, I think we, in a dualistic world in which we are living, body and mind, summer and winter, cold and warm, gold is the analog safe haven, if you want. And Bitcoin is the digital safe haven, and they both complement each other, and they give a complementary unit of true safe haven for the 21st century. That's my personal opinion.
So how much should you hold in terms of asset allocation? If you were to hold both gold and Bitcoin, how much of each should be in your portfolio?
Well, I think with gold or precious metals, I would say you should have, especially in these times where we are now, you should have at least 25% of your net worth in physical gold, silver, and selected mining stocks. And Bitcoin, I'd say 1 to 5%. I think 5% is already a lot, but 1 to 2%, like Paul Tudor Jones, seems to be very reasonable. Of course, if you're a Bitcoin freak and you really know the space and you're into it with your life and passion, you can go much higher allocations, but then you live Bitcoin on a daily basis. As a normal investor, I think 1 to 2, maximum 5% are good.
Perfect. Thank you for your thoughts, Florian. I appreciate you being here today.
Thank you very much. You're welcome.
And thank you for watching Kitco News. We'll have more for you, so stay tuned.